Wipro disappointed the street, and this is what the management had to say in response to how, two of their clients facing bankruptcy was what led to a disappointment in the numbers.
We will resume our growth trajectory from Q2 onwards. But as you would imagine, if we start a little weaker in the financial year, it'll take us a little longer. And I've always said that you need to look at industry matching growth in two different frameworks. One is on a Q-on-Q basis and then a year-on-year basis, because there is also a run rate effect which comes in. So you need about 4 quarters of industry matching growth before you come to year-on-year industry matching.
Right. One more thing I wanted to get from you, Abid, is in recent weeks, if we look at the management commentary from TCS Infosys, they are talking about how the nature of digital spend has evolved. It's no longer happening at the periphery, but at the core, therefore leading to a lot of opportunities for IT companies. Are you seeing that play out in terms of the size of the deals, the size of the projects that you are executing for companies?
Absolutely. As I mentioned earlier, our digital order book has been the highest ever. We are seeing increase in deal sizes for a large number of our enterprise customers. We are their digital partners now, so we work very strategically with them. While we continue to do some proof of concepts and smaller pilots with new customers, a lot of our key large customers, growth is being driven by our digital offerings over there. So a lot of transformation is happening from the existing legacy portfolio into digital, and we are seeing larger deals and larger strategic partnerships with them.
Right. Jatin, margins have been a worry, not just for this quarter, but the last few quarters. I know you don't give a margin band, so to speak, for Wipro, but do you expect FY19 to become better, and what levers can you really use?
So if you see our building blocks, utilization is very good. If you see our offshoring, its offshoring is very good. We have had probably best automation story. What is impacting us is the volatility and external noise. Volatility of India and Middle East business, reduction in revenue in our health plan business, where you have to cut cost in line with your revenue to be able to remain profitable. So we believe the core business is healthy and it can generate good profitability. Q1, and therefore we think that during the course of the year we will improve margin as we go. But
so will you come back to sort of near 18, 19, 20?
With the moving parts that we are in with, I would rather execute every quarter and work through every quarter than guide a range. And therefore for Q1 we'll have to work through the headwinds on revenue and MSI.
But are you confident of getting back to at least last year's levels? I think you ended the year at what, 16.5%?
So we did 16.8% if you take one-timers off. And I think our business can deliver certainly a good margin.
So you're confident of coming back to that?
Yeah, level. If you see our last few years' margins, they are good reflection of where we can be. And we need to work through the element of noise, as I say, to the operating margin through the quarters, and we can get back to the trajectory that we have always delivered in. That is the inherent potential of business to deliver those mindsets. But we have to work through these periods as we go through.
Right. Banu, coming to, a lot is being said about India and Middle East, the stress there. Is the worst of that over? Should we anticipate some overhang in the coming quarter or two? And also, vertical-wise communication has sort of, seemed like a laggard when I compare it to your other strategic business units. All of them, double digits, communication still in the single digit. Telecom has traditionally been a strong vertical for Wipro. So what's happening there? If you can give us some color on India and Middle East as well as the communications part.
So on the India and Middle East business, right, we described to you the strategy that we are following for relooking at that business. That strategy is in motion right now. The transformation for India Middle East is in motion right now. We're able to bring in a lot more global practices into those businesses. We're able to bring in a lot more execution discipline into those businesses, and also a lot more discipline in terms of the way we construct the deals as well. So while there is volatility because the transformation is in progress right now, we do believe that all the things that we're doing well for that business will augur well for that, India Middle East business right now. Coming to the communications business, the business itself, if you look at globally, the business is under a lot of transformation for our customers. And Q4 specifically is a question of specific customer projects getting over. But at an overall level, we do believe that there is a transformation in progress right now for that business as well. We are building our capabilities and competencies required for managing that business. There's a new leadership change for that business as well right now. So I think we will transform that business as well.
Saurabh, coming to you, what levers can you really help Jatin with when it comes to improving margins? We've seen a lot of companies, you going to utilization again and again, the offshore-onshore mix, but what levers can we expect from the HR side?
As Jatin, utilization is a 13-quarter high.
And is there still upside?
Absolutely. There's headspace to go further. So we will work on that. That's a big lever for us. But I must tell you, we'll have to look at in two parts. One is, whilst, as you see, the margin overall is stress, very clearly, as per the 6 strategic themes laid out by Abel, investments will continue to be made in those so that we look at the long term. So we'll have to strike a balance between the investments required as well as on the near term in terms of looking at the margins. So both have to happen. Here I see things in terms of driving productivity, driving offshoring, improving utilization, making sure we do the right hiring, all and non-linear growth. These are all the levers which we have to improve our margins, and we'll continue to work on it.